Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Near. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now, jumping into the weekly chart. As you can see, we have a Fibonacci retracement set up on the chart. So we have our swing high that we printed in January of this year, and we have the swing low printed in November of 2021. As you can see, our 1.618 target at $2.89 was perfectly met in May. From there, we had a very nice retracement into August. Afterwards, we saw a pullback, back test of resistance, and a move all the way back to the 1.618. Now, it looked like we were going to hold this level as support, but with the Bitcoin capitulation, we obviously fell back down below the second fib level at $1.81.5. We talked all about this in the previous update, so make sure you watch all the videos because I do cover a lot of important support and resistance levels. And taking a look at our support block over here from $1.90 to $1.54. This is actually the low that we printed in July of 2021 at $1.56 or 58.7. So 59 cents basically is the low here. That is why we have the bottom of the support block at that level, and the candles closed above the $1.90 region. That's why we have the top of the support block there. So we are in this support block right now, and this is where I would be buying. Obviously, I have been buying for quite a long time. I've been buying here, I've been buying here, and I bought some here, and I'm buying some here as well. So my average buying price is going to be somewhere around $2.80 or 70 cents after I'm done buying. And once we start moving to the upside, and once we get to our potential target that we're going to have in the next bull market, then the profits are going to speak for themselves, and we are going to do that if we have patience, right? We need to have patience. Otherwise, you're not going to succeed in these markets. Now, let's say Bitcoin was to drop back down to $12,000 and we were to go to, let's say, $1.31, which is the 2.272 off of this Fibonacci. Now, let's take this as our potential bottom of the bear market, and let's bring out a Fibonacci retracement to the upside. Our 1.618 level is going to be here at $112 per token, which I think is doable from where we are right now. That would be a 6,000% from the bottom there. That would be a 8,400% move. So maybe not that high, right? Because this is a top 20 altcoin. Let's say we get to our 1.414. That would be almost a 5,000% move. That seems more likely to happen. So if that plays out, great profits to be made here. Obviously, some altcoins go absolutely parabolic during bull markets, and we can absolutely see Near go to $100, right? But you have to, you have to understand that there are circulating supplies, there are news, demand, etc., things that play into the hype behind the token, and we need all of those things for the price to reach those extreme levels. Now, taking a look at the weekly RSI here, very interestingly, we do have a channel down pattern, and we haven't actually bounced off of the resistance of the channel pattern, which I was expecting here in November. And right now we are on our way back down, potentially retesting the support here of the channel down pattern. Now, the last retest was back in June, so maybe we are on our way to do just that once again here. And that might be the final the final capitulation, the final pullback, and from there we might start recovering into 2023 and 2024 for our bull market. So let's see if that plays out. For now, Near is in a great buying position. If you want to start dollar cost averaging right now, I would, this is really good. These prices are great, but you don't know how lower or if it's going to go any lower. So I would say anywhere from $1.90 to $1.54. Great buying opportunity. Potentially set up some buy limit orders as well, all the way down to $1.31, maybe even lower, because you don't know how large the wick is going to be if we get a capitulation, right? And you get this wick all the way down, and you're going to have this candle here, right? But the wick is going to be all the way down here, just like you had this wick over here. So the wick can take you all the way down below $1, maybe 50 cents. You don't know how low that wick is going to go, but if you have your buy limit order set up in advance, even at random, you might have those orders filled in. But I'm not going to be giving you random levels. My levels and support zones are based off of lows, highs, previous lows or highs, obviously, Fibonacci retracement levels, and technical patterns. So I don't bring those out of my bum, but if you want to set those up below, right, you can potentially look at this low here that we printed in December of 2020. That's going to be another level for us to hold as support at 94 cents. So let's see if that's something that we can hold. You also have another resistance level over here, and that's going to be at $1.09, and that is potentially another simply support block that we have. So if I bring out the rectangular pattern here, and I do something like that, that's just another support block that we have, and you know, that's just how you do it. And I do want to switch over to the Binance website. Now, jumping into the 3-day chart here for Binance, as you can see, we do have some sort of a falling wedge playing out. If I have this set up correctly, of course, we may continue falling back down. We need to see this kind of wave. We need to see the bottom of this wave in order to see whether we're where is the low, right? And where do we place the support of the falling wedge? As long as it doesn't go parallel to the resistance, that's going to be channel down pattern at that point. But for now, this is a falling wedge. We're approaching the apex very nicely. For now, we're potentially going to be adhering to the support resistance levels until you see the break to the upside. Target is at $5.64. So great entry points here for the Near project. The last bounce off of this support was in June. So like I said, if you continue moving down, just move the trend line here until you have it, right? Because you may come back down to $1, let's say. You come back down to $1.50. From there, you see the bounce. That's where you want to move the trend line. So let's just have it like that for now. But this is potentially a falling wedge. But obviously, if we see a very strong capitulation and drop, that's not going to be a falling wedge. We're invalidating the pattern immediately. But this is just a potential pattern that we have at hand here. And this is the 3-day chart, by the way. This is not the weekly. This is the 3-day chart, and as you can see, we do have a resistance block above us, which was our previous support block from $3.10 to $2.87. And as you can see, we lost that here in November. Potentially, we're going to come back up to retest that as resistance for a back test of resistance, as we usually do. And then we're going to see another move to the downside. Obviously, we have the 20 EMA there on the 3-day chart. So keep in mind, we do see these bounces off the 20 EMA here and there. The last one was back at the beginning of November. And as you can see, we did have 2 fake outs here above those, above the 20 EMAs, and back in April, we got above it and we pulled back down, and this was the first kind of August peak that we had, and then the September peak, and now the November peak. So we're printing lower highs and lower lows, and we're doing everything we need to be doing in a bear market, to be honest with you. And if you just buy off of support levels and you dollar cost average in, and you're not a degen, then you should be fine. Obviously, we do have this support level here of the previous correction that we had in 2021. So this is going to be a major level for us to hold as support at $1.67. Potentially, this could be our bottom. Lots of projects are bouncing off of their July 2021 low. Yes, that is also happening right now. And if we take a look at the 3-day RSI, we're absolutely in the oversold here. And that's something that we need to pay attention to, because we haven't been this oversold on the 3-day chart ever, right? You can see in July you went as low as 32 on the index. In June you went as low as 30 on the index, and right now you're sitting at 29.5 on the index on the RSI. So that's something to keep in mind. And obviously you do have this major resistance level here. So if I bring out this trend line and do something like that. There we go. That's a descending resistance trend line that we have, and we're constantly bouncing off of that level there. So just as we're bouncing off of this resistance level here, right? Just as you're bouncing off of that level there, right? You're doing the same thing on the RSI. Only here I didn't draw that. We have that here because it's better seen with all these consecutive lower highs. So draw this out on your chart. Also, if I go to the daily here and bring out the daily RSI, you can see that we're very much oversold on the daily, and we just had a retest of resistance of this previous support block that we had. So that was a nice swing trade, but I honestly wasn't swing trading my near. If I swing trade, I always let my patrons know as well. So feel free to check out my Patreon. MACD printed a bearish cross on November 8th. Great looking glass pattern or indicator here. As we're dropping back down, the MACD is becoming a bit more useful because if you're in a crab market, the MACD isn't a very useful indicator, but we did have this sudden drop, and we have our bear market the downtrend confirmation for the daily chart using the MACD, and we're very overextended from the 20 EMA, so I would expect a relief rally into the 20 EMA at the very least. That's a 27% move actually, which is not bad. So potentially we could see that happening because, like I said, all the indicators are pointing towards a little relief rally. The stochastic is also in the oversold here, and we may just see a little move to the upside here and a move back down. So yeah, be on the lookout for that. Draw all of this out on your charts. Let me know if I missed out anything important on the charts as well. Feel free to follow me on Twitter. Feel free to join me on Patreon, and I'm going to catch you in the next one. Goodbye and good night.